in money for your business? Well, that's exactly what we're going to decode during today's training. Today, we are going to be talking about everything you need to know to make sure that you can actually build your business where you can get large sums of money. So we're going to walk through how to set up your business to structure it the right way, how to put together business plans, what lenders are looking for, how to get your ducks in a row, and then this actually where to go to get the money. All of it we're going to decode in this training. You're going to leave this training and clearly understand exactly what you need to know to be able to get large sums of money for your business. So where do you get started? I talk about this a lot, but I have to start here because the reality is the majority of business owners that get turned down for funding get turned down because they just don't meet basic requirements that lenders and credit issuers have. And if you meet these requirements, well, you already have overcome an obstacle that gets upwards of 60% or more of entrepreneurs denied. Look, so think about this. Nearly 90% of funding that goes through big banks, these long-term, high loan amount, low interest rate loans, over 90% of the loan applications that get submitted get denied. And here's what's crazy. Nearly 60% of those denials are because the business owner just didn't meet basic fundability requirements. It's why I talk about it so much because, again, 90% get turned down, 60% plus were denied because they just don't meet this one criteria. So if you meet this, you're already better than the 60% of business owners that try to get this kind of funding and get denied. So you got to set up your business where it looks different than you as the actual owner, right? And this is overall is called fundability. It's kind of the formula that lenders and credit issuers look at. And you got to start here because if you don't build the fundable foundation, you can't even begin to think about getting high amounts of money. So you got to make sure you're registered with the Secretary of State. You got to make sure you check to make sure your record with the Secretary of State is up to date, meaning that your actual entity is active with the Secretary of State. You want to avoid high risk industries. I talk about this a lot because most of you don't know what your NAICS code is. You don't even realize what industry you're actually seen as. And you have to do that because there's a big difference between subsections of industries. Some will put you in high risk categories, some won't. So you really need to get your business set up with the Secretary of State. Make sure your records are up to date with them. Make sure your address, your phone number, your registered agent, all of that is up to date with them. You also need to make sure the IRS, Secretary of State, your loan applications, the credit bureaus, everywhere you can, that the actual industry that you have set up is correct. Now, the easiest way to do this, as I typically show, is go to NAICS.com, and then you just have to go to here to find your NAICS code. And again, this came up on a live stream the other day where somebody said, hey, I'm in transportation. What is my NAICS? And you see the problem with that is that when we just click on transportation and we count these, I gave up before I got to 100 on the live stream, but I think there's about 100 subcategories of transportation. Okay, there's over 30 subcategories of real estate. So you can't say you're in the transportation industry. You can't say that you're in the real estate industry. You have to understand which one of these you actually are. And then moving forward, when you fill out an application for funding, you need to clearly say, what is your industry? I'm in packaging and crating, NAICS 488991. That way there's never confusion of what industry you're in. You can't be more clear to a lender credit issuer. If you came in and they said what industry and you just said transportation, you're leaving it up to them to choose one of these 100. And if you're a lender, then you're always going to choose something that's high risk because it kind of protects your butt if you do that. So how do you avoid high risk? All you have to do is just go high risk NAICS. And if you do this, then you're going to find two things. You're going to, first of all, find here a link from NAICS.com of high-risk industry to avoid. And we've got a great blog post on this as well that teaches you everything you need to know to avoid high-risk NAICS codes. Now, what I like about this personally is that once you do this once, you never need to do it again. And that's what I like about fundability. Once you do fundability right the first time, you don't really have to go back and do it again. You should regularly every 6 months or a year just do a check to make sure nothing's changed that you forgot about. But as long as you do this once, then you're in a really, really, really good position. And by the way, if you know your NAICS code, type it in. I always like to see how many people actually know what their industry high-risk code is. And even if you don't, then give me a shout out. Tell me where you're coming in from. I always like to say hello as well. And Daniela, what's up? Coming in from Lawrenceville, Georgia. Thanks for saying hello. So again, give me a shout out. I always love saying hello to everybody. Tell me where you're coming in from. And by the way, do you know what your NAICS code is? Give me a yes or no in the chat. And if you do, type it in. I'm interested to see how well you actually know what your industry code is. You've also got to make sure that everything is congruent everywhere. The number one reason that applications for funding get denied is because of fraud concerns. So think about this for a second, and it makes a lot of sense. You go to apply for a loan. The bank has your application. The first thing they do, or their computers do, is they go and say, is this a real application or is it fraudulent? So then to validate it, they look at your business info. They immediately go to Secretary of State to just make sure the business applying for the loan is even a real business in the actual Secretary of State. When that can't match, and what I mean by that is, let's say I'm Credit Suite on my application. My Secretary of State is Credit Suite Inc. So already there's a discrepancy where the computers aren't sure these two things are the same. Now, to make it worse, to exasperate the problem, let's say that I put the address originally when I set up the business and I never updated it. Now I got a name discrepancy, even though we think Inc. isn't a big deal, it is. And now we have an address discrepancy. So already these computers aren't able to 100% link that the business applying can even be found in Secretary of State's. They throw up a fraud warning. It gets pushed to an underwriter, and the underwriter ain't going to manually go through this stuff, okay? And ain't's a pretty big word, but I'm ripping that out. You know there's problems. So they're not going to do that. Like the underwriter is not going to go, oh, there's an address, there's a discrepancy. Is the company real? Let me go to Secretary of State. Let me pull it up. Let me look. That doesn't happen. They almost always immediately decline it because they're not going to say there's no fraud concern when the computer just said there is. Well, if there really was fraud, that underwriter's on the hook for that. So this is why massive amounts of applications get denied. It's so basic. But if we think about it, we mess it up all the time. How many times have you made a change to your company, your email, your address, your phone number, and not thought to go back and update your Facebook company page? I'm guilty. I don't even think about updating my Facebook company page when something changes in the company. So, but what we don't understand is lenders and credit issuers have these crawlers that are crawling everything. They're looking at Yellow Pages. They're looking at Yelp. They're looking at Google My Business. They're looking at our website or social media pages, Secretary of State, just to validate that the business is the same. Now, if you think about the other side of it, they come in, I apply, their computers go to Secretary of State and go, yep, there's the business, same name, same address, same phone number, same website. Oh, look, website has the same address, same phone number, same email, social, same address, same email, some phone number. Oh, Yelp, Google My Business, Bing, same. That congruency is like a big check, and lenders say the application is 100% legitimate because all the information on the app is the same as the business represents online. So this congruency is one of the most important things that you can really look at when setting up your business. And a lot of people, Sioux Falls, South Dakota is coming in, and Danielle, and you know you're an NAICS. Yeah, I love that you know that. That's awesome. Celotai, no, I don't know my NAICS code. A lot of people don't. Hello from Birmingham, Alabama. Yes, too many businesses don't know what their NAICS code is. And Covington, Georgia, coming in. This is a big mistake because a lot of people just don't know their industry code, and they get seen as high risk. And here, I'll show you a real example of why this really makes a difference. I want you to see what lenders see. The purpose of this today is if you want millions in funding, you need to clearly understand what lenders are seeing. So let's look at this just from an actual lender's perspective, and let's just look at some real business credit profiles, and I'll show you exactly what I mean here. So here is a business, and there's two scores that we really care about here. This is an Experian credit report, a real Experian credit report. Okay, and what we're looking at is we're looking at what's called IntelliScore. This is the main score Experian offers. The next thing we're looking at is what's called a financial stability risk score. This score literally depicts your risk of shutting your doors, ceasing operation, filing bankruptcy, you're closing your shop, like you're really high risk of going out of business. And now if we look at this, this is how it's reflected. This is low risk, this is high risk. And in this case, the business is about as high risk as they can get. Now, why are they high risk? If we continue to scroll down the credit report, we're at the end. There's nothing here. There's no trade data. There's no accounts reported to Experian. Experian has no data on this business. So why are they showing that they're almost going to file bankruptcy? The risk is that high. Well, let's look at what they say. Lack of active trade lines. The company has no credit. Well, you got to build business credit. Huge problem if you don't. Look at the next. Risk associated with business type. Look at the next, risk, or the fourth, risk associated with company's industry sector. Now, not to get us too far in the rabbit hole, but this is very interesting here, and I want to teach you something a lot of entrepreneurs don't realize. The credit bureaus give you the ability to submit your tax returns to them, your financial data. If you submit it, then they basically look at your scores, and they take that into account of the financial health of your business. If you don't give them financials, if they don't have your tax returns, as crazy as this sounds, the credit bureaus default to your financial stability being based on how many employees you have working in your business. So when you go to your Secretary of State and you say, I have 0 to 5 employees, 5 to 10, you don't even think anything about that. But what you may not know is the credit bureaus take that and then gauge your risk based on how big your business may be. So if you're a newer business, have less than 5 employees, and they don't have your tax returns, we see this problem that they don't like at the size of the business, and it adversely affects your scores. But bottom line, of the 4 things they're saying affecting the score, 2 of them have to do with industry. So this is a really big deal, because if you're not seen as a if you're seen as a high risk industry, even when you have 0 credit on your credit report, you're still seen as a massive risk, all because your industry isn't liked by the credit bureaus. This is exactly why you have to know what industry you're in. If you don't, that's what lenders see: low scores, verge of failing, don't like industry. And then as a result of that, this is why you run into problems getting any kind of credit or financing, let alone potentially being able to qualify for millions of dollars. So you got to make sure that information is congruent. You got to know your industry. You got to stay away from high-risk industry codes. You also have to have a real deliverable business address, a real physical location. Now, there's a couple ways around this, and the way around this is to actually get an actual virtual office. So a virtual office, DaVinci, Regus, and Alliance are the biggest ones in this group. Now, here's what I like about virtual offices: is virtual offices are way cheaper than renting a real location, and it gives the perception to lenders and credit issuers that you are. Like if I have a virtual office here at a Regus office in downtown Tampa, then it makes it look like my business is in an office in downtown Tampa. What you have to stay away from is UPS or PO boxes. Now, I recently tested this. So we're testing the strategy of local SEO and getting businesses ranked in Google My Business and at the top of Google My Business, and then websites that generate leads for that industry. And in testing this and testing 10 different ones, 2 of them actually Google My Business did accept the actual address that was from an iPostal. 8, they didn't. They declined. They denied that address. But 100% of the attempts with an actual virtual office through Regus, Alliance, DaVinci, all were successful. So what I'm trying to say is that even when you're setting up a Google My Business listing, when you're trying to get loans, when you're trying to get credit lines, these things know if you're using a UPS or a PO box, including an iPostal. These are just mailboxes, and they're in a database that lenders and credit issuers tap into and know that you're using a PO box or mailbox address. And then at this point, you can't be applying to get millions in funding when you're not even telling the lender where your business operates out of. So you got to stay away from UPS and PO boxes. You can use virtual offices. Those are okay. Some might not accept them, but it gives you a better chance than UPS and PO boxes. And you want to try to stay away from home addresses. It just doesn't give you enough credibility. You need to have an EIN number. It's free. You can get it from irs.gov. Believe it or not, you could be a sole proprietor and be in business without it. You need it. You can't even build business credit without an EIN, and you can't get millions in funding without business credit. It just can't happen, because you have to have acceptable business credit reports for SBA to even lend you money. We'll talk about that in a minute. You have to have your business entity set up, preferably a corporation. If you have to choose an entity type from a lender and credit issuer's perspective, I'm not here to talk to you about tax benefits and accounting and all that. That's somebody else. For lenders' perspective, you want to have a corporation. Now, an S corporation, the profit or loss rolls over to your personal taxes. A C corporation, you pay it separately. You could talk to an accounting and getting an accounting advice. I'm not an accountant. This isn't accounting advice, but lenders love corporations. So preferably, if you could choose an entity type, get set up as a corporation. If you choose anything else, you can get an LLC designator on there. Now, the LLC isn't an official entity type per the IRS, but you can layer it on top of a sole prop or a partnership or a corporation. My advice is just go straight corporation. It's going to give you the most credibility for lenders and credit issuers. You got to get a phone number. It needs to be toll free. It needs to be listed with 411. Basic checks a lot of business owners miss. Lenders won't approve you if it's not in 411. This is basic starter vendors. When you build business credit like the bottom of the barrel, easiest to get approved with guys, these guys also require a 411 listing. That's like one of the basic requirements you're going to find in the lending industry as a whole. You got to get it done. Now, we do that for our clients. It's so important. There's also a place called List Yourself you can look into to list yourself. You can't go to 411.com. 411.com isn't even 411. So keep that in mind as well. And let's go through, make sure we got some questions here. Hey, Toonie, the Hillitai coming to Georgia, Atlanta, Georgia. Where do we go to check and make sure everything is the same? Secretary of State? Well, that's a really good question. And the reality is everywhere. You should check your social media pages for congruence. You should check Yellow Pages. Now, a great service to use at a cost is called Yext, Y-E-X-T. You can use a service like Yext, do a search, and then in one place you can make a change and it updates it in all the Yellow Page type listings. But go to your main places. Go to Yelp. Go to Google My Business. Go to your social media pages, your website. Go to Secretary of State. Check with IRS. Anybody that gives you statements like your bank, make sure you check with those sources as well. And then ultimately, you also want to check a source like Yext that can update all that information online everywhere. And so he says, what is my industry code in Georgia for trucking? No clue. This is the point. I don't have these memorized, guys. There's hundreds and hundreds of NAICS codes, and I don't know, based on trucking general freight, what your NAICS code is going to be. That's why you want to go to NAICS.com, and you go through, you only have to do it once to figure out what your actual industry code is. Don't take it from anybody else, okay? You want to make sure that you go through and figure it out on your own, because I don't know. I don't have everybody's codes actually memorized. And a lot of people are asking that question. I don't know. I have no idea what your actual NAICS codes are. I'm just giving you the info to be able to go get them, because there's no way I can memorize them all. And depending on the ins and outs of your business, determine your NAICS code. And you want to do research to make sure that doesn't put you into a high-risk category, especially if you can choose between 2 or 3 different kind of NAICSs. Like, you might do something that could put you in 1, 2, or 3 different categories. Business licenses, if you can get one, get one. Places like Granger will give you $2,500 credit lines just because you have one. It's a really big deal. I can go to my secretary, or I can go in my county and get one. You can get one in your industry, your state, your county, a lot of different places. For example, if I just come here and I say business license, and I'll say Pasco County, Florida, then I can see right here that it tells me right away, obtain license and permits right here. Business license, start your business. So I can come here and get a business tax receipt. Looks like, here you go, business tax receipt information. That's what we call it down in this county of Florida. So with one quick search, I can see if I can get any licenses in my county. They're super easy and cheap to get. Set up a website, set up a professional email address. You know what's interesting is recently I've been experimenting with local SEO. And I can tell you that I can have a website built that's a very elaborate website for less than $200. Here's what I mean by built. I can have the website created and built for about $100, the actual website put together and put online. I can have the content written for about $200 for a massive website. So for less than $300, I don't even have to write the content. I can have an outside person from Upwork write all the content for the website, somebody else from Upwork build the website for less than $300. So it's simple and easy to get this done. Even if you don't have the time to write all the content, have somebody on Upwork do it for you. Test some people to see how they work, and then have somebody else build it for you, and make sure that you have your own hosting. It needs to be on your own URL, and your URL really should be the same as your business, and your email should be the same as your actual domain as well. So my email is info@creditsuite.com. My website's creditsuite.com. That's kind of what you're going after. Stay away from Gmail, AOL type email addresses. You have to have a separate bank account. It needs to be in the business name. If you want millions, you got to be managing this thing responsibly. Okay, there's a whole credit score and report from Check Systems that just monitors how you manage your banking history. What lenders and credit issuers are looking for about 4 or 5 things. They're looking for, first, do you have more money going in the bank than going out? They call that positive cash flow. That 2, do you have balance at the end of the month? Do you have money in the bank account at the end of the month? Okay. 3, the other thing is they want to see that you have a bunch of consistent deposits, not just one here or there, but a lot of money on a regular basis going in the account. They also want to make sure you don't have non-sufficient funds, or what are called NSFs, right? We overdraw the bank account. So ultimately, they're just looking to make sure we manage the bank account responsibly. We got more money going in than going out. We got money in there at the end of the month. We're not overdrawing the bank account. Now, this is very important if we're looking for millions in funding, and here's why. There's something called the bank rating that you need to know about if you're ever going to get an SBA loan. Now, the bank rating is an internal credit scores that banks use. And the bank rating basically is on a low 4, mid 4, high 4, low 5, mid 5, high 5. That's the scale. In order to get any kind of loan from your bank, you typically, like an SBA loan, you have to have at least a low 5 rating. And the way the bank rating works is a low 5 rating is more than $10,000 in your bank account on average over 90 days. So we look at the last 3 months, and your average has to be $10,000 in your bank account for 90 days or more for you to have a bank rating acceptable to typically get an SBA loan. Now, the highest bank rating is about 75 grand on average in your bank account. So if you want to have the highest bank credit score, internal score they use to score your business, then you need to keep 75,000 on average in your bank account 90 days before you go to get that SBA loan. The lowest you can have is 10,000 on average in your bank account over the last 90 days. Even if you got to borrow money from other sources to get it in there, you got to get it in there. If you don't have 10,000 or more in that bank account, you're just not going to have a high enough bank rating to be able to qualify. And if you're not managing your bank account responsibly, you're not going to get approved either. Okay, the next is you got to build business credit. It's a requirement. You have no choice. If you're going to get $1 million loan, multi-million-dollar loan, especially if you're going to places like SBA, you have to have business credit established. And the reason for that is because they look at a score called your FICO SBSS. It's basically FICO Small Business Score. And in order to get an SBA loan, you have to have a minimum of a 140 score. SBSS goes from 300 down to like 0, right? So you got to have a 140 score or higher in order to even qualify for an SBA loan. But here's the catch. You can't mathematically have a score of 140 or higher if you don't have established business credit. It doesn't work that way. The way FICO's SBSS works, it takes into account your business scores, your personal scores, amongst other data. And then it weighs the business scores typically heavier than the personal scores. But if your business credit's not established and you have an 850 consumer credit score across all 3 bureaus, you still could not mathematically have a 140 score to qualify for SBA. You can't. Bottom line is you cannot qualify for an SBA loan if you do not have established business credit. You have to have it. And even if we go through alternative lenders, we still have to have it. Here, I'm going to see if I can just pull this up. You still have to be able to have it, because if not, this is exactly what lenders are looking for. If you think about it, it makes a lot of sense, right? Because ultimately, you're not going to typically come in, and you can actually see right here, here's a little bit of information about SBSS. Now, lenders won't even take you unless you've got a 144 score. Here, we're saying, hey, look, you got to have about a 150 score in order to even qualify for an SBA loan. Okay, and I'm not going to dig around on your own time, but if I look for if I'm going to look for, that's Lendio trying to bait and switch this Lendio, not very cool. Okay, but if we look here at, and I'm not going to take a bunch of your time here, but I'm just trying to look and see what the minimum credit score is per SBA. But I can't. I find a bunch of other sources. But anyways, the bottom line is that if I look at SBA's website, what they would tell me is that I have to actually have acceptable business credit. So if we look at credit score requirements, let's look here and let's see if we can pull something up real quick. They're giving us different kind of loans. Let's look at an SBA 7A loan, eligibility. Okay, otherwise, funds, credit requirements. Okay, pay your business per business owners the amount of their personal. Okay, here you go. The lender will check your personal and business credit histories. You are more likely to be approved if your credit report shows that you have a history of meeting your credit obligations as agreed. If there are any blemishes on your credit reports, be required to explain them in detail. So there's a few things I want you to see here. First of all, they're telling you flat out that you need to have personal credit established and you're going to get approved. Your chances radically are better if your credit report shows you have a history of meeting your credit obligations. The bottom line is you can't get millions in funding if your business doesn't even have a history of paying its bills. Your business needs to have a credit report to have a history of paying its bills. This is the biggest telltale of what kind of credit you need to qualify. Here it is. If there are any blemishes on your credit report, be required to explain them to the lender in detail. Blemishes, I don't know. I like to do this. Let's just do this real quick. Dictionary. Let's see what blemishes means. Always mistype stuff. Okay, blemishes. A small mark or flaw. Okay, so let's think about this for a second. SBA is saying, hey, if you have any small marks or flaws on your report, be prepared to explain them to the lender in detail. So you can't come into this stuff if you have no established consumer or business credit or big problems with your consumer or business credit. They're telling you even blemishes have to be addressed. So you can't get these loans if you don't have business credit. You got to build strong business credit profiles with D&B, with Equifax, and D&B, Equifax, and Experian, or you're not going to qualify. And as we just saw, consumer credit matters as well. People ask, what kind of requirements do you need? I've seen SBA mention like 620 credit scores, but I've also seen them deny 680 FICO score borrowers because of one blemish on their credit report that was a late payment on a major account like Bank of America. So the bottom line is your consumer and commercial credit has to be strong or you're not going to qualify for these higher dollar loans. That's why they're saying, hey, you got to come in, even if you have any blemishes, you got to get that stuff addressed. Chris, hello. Thanks for coming in from Oklahoma and saying hi. Mark says, I have two companies. How do I choose the one I start with in regards to building business credit? Well, that really matters to the whichever one you're going to use to build business credit and access and actually get business credit you're really going to use. So my best advice to you here is to be able to build, if you have two companies that are active, build business credit for both at the same time. Go through and do an industry code for both businesses. Check your Secretary of State with both businesses. Follow the exact same steps with both businesses at the same time. If you go to get a Uline account, get a Uline account for both businesses. You go to get Granger, get it for both businesses. I find that if you're going to really grow both businesses, that it's easier just to build business credit at exactly the same time for both. That's the way I would actually handle that. Okay, smaller marks on personal or biz. It says both. So if we go back to SBA, here's their actual requirements. You can look right here. Here's the URL. SBA 7(a) loans. Here, I'm going to see if, can I type this thing in chat? I think I could type this in chat. So I'm going to go and see if I can type this in chat. Type a message here. I don't know if this showed up or not, but I just went ahead and put this into chat right now. Let me make sure it goes to everybody. Does it go to Restream? Yeah, it goes to everybody. I don't know. I think that could go to everybody. So, but here you can see the actual URL right here for SBA. And if we just come down under credit requirements, we can see right here if there are any blemishes on your credit reports, and they're referencing both to personal and business credit histories. So to answer your question, it's both. They're looking at personal and business credit reports. So you got to get that stuff addressed. Next, you got to have a business plan. You need to have some kind of idea or structure your business. Now, admittingly, SBA does not oftentimes require these. But if you do have it, it goes a long way to helping you get approved. Okay, it means it's going to be really tough to get approved if you can't answer questions that are relative to your business plan. And if you have one, it goes a long way to helping you get approved. Now, what's on a business plan? Well, it starts with an introduction, right? Summary of the business idea, description of more detail of the summary. Strategy section lays out your plan for basically what you're going to do with the business. Research, analysis of your audience, and competitive analysis. The business plans needs to show that you clearly understand who your audience is or customer avatar. It needs to show that you completely understand who your competitors are as well. And no, they don't want to hear that you don't have any competitors. Everybody has competitors. The planning section, What's their plan for design and development, the plan for operation and management, who manages the team, what employees are on board. Okay, all this is wanting to be discussed or actually in one slide of the business page or business plan, or one page of the business plan. Financials, okay, what money do you have? Where do you get your funds? How does the business basically make money? And what kind of money has it been making? What have your financials in the past? What are your projected financials for next 5 years as well? How much money do you need? What are you going to use the money for? They're going to ask this question. You're going to have to explain what you plan on investing the money in. And, they want to see a pretty sound idea, especially if you're looking for millions of dollars. Okay. And again, it also has the financial projections as well. An appendix, not required. Recommended in a lot of cases. May include credit histories, resume, product pictures, letters of reference, anything like that that gives you additional credibility. So your business credit reports, your consumer credit reports, resumes to show that you and others have experience to do the business, login information to your software so they can see what you sell, pictures or information about your product, anything else that you think can help you want to add into this section as well. Anything that makes it easier for the lender, more details are always better. So if there's anything that you think that they may actually want to see, you probably should address it here. And you want to have a professional a presentation as well. There's all kinds of SBDCs, small business development centers, that you're able to access in your area. And a lot of those will be able to help you along the way. Now, that being said, the business plan is a large part of mapping out what you're going to use the funds for, what you've done in the past. And again, any additional information you can basically provide to plead your case, you want to provide it. Anything that you think is of value to sell yourself. I used to be a master of FHA loans when I did mortgages because I was really good at writing letters of explanations or helping my clients that said, here's all the benefits of why you should give me money. Here's all the things I want you to see. So you have a chance of supplying all that extra detail to make it more more appealing to that actual lender or credit issuer. You're not going to get millions if you don't have revenue. As a matter of fact, you're going to have about 3 years worth of tax returns to show, and they're going to have to show that you have some kind of profit. Most people want to write off everything and not show any profit at the end of the year. The problem is you're not going to get millions in financing if you're losing money, unless you're going with like a venture capital or an equity play. So if you want to get money from a bank or from an alternative lender, then you've got to have tax returns. Those tax returns should show some kind of profit. And they really like to see that your revenue is consistent or increasing month after month. So payment amounts are variable based on terms and rates. So a $1 million loan at 4% fixed for 20 years, for example, is $4,800 a month payment. But that same loan for 15 years is $7,400 a month payment. So the reason I want to tell you this is because if you're going to get millions in funding, you want to get the longest loan terms available. That's why the sources I'm going to go through and kind of give you an idea of where to get the money is going to be crucial, because the longer terms are what you need. There's all kinds of places out there like On Deck and cash flow lenders that will give you $500,000 in funding, but they're only ever going to give it to you over 2 or 3 years. So let me give you real math and some real stories about SBA and some other things I haven't brought up and I want to bring up. So for example, the very first loan, and keep track of this math, the very first loan that we got at Credit Suite was $75,000. $75,000, and our loan payments were about $9,000 a month. So why were our loan payments so high? Because our term was so short. I think our term was 2 years or a 3-year term. So we borrowed $75,000 over 2 or 3 years, and as a result of that, even at a pretty good interest rate, our loan payments were $9,000 a month. Fast forward to our first SBA loan. Loan term is way longer, 20 years at this point, 20 years plus. We got $325,000 for about $4,600 a month. So we literally got $325,000 for half of the payment of what we got $75,000 for. That's how important term is. And this is why millions in funding means you need a longer term solution, because if you don't have a long loan term, your payments are going to be outrageous. But if you have 20, 30-year loan term, your payments can stay very affordable. I mean, let's be honest, to get $1 million and pay less than $4,800 a month, you and I, there's probably not too many of us that wouldn't do that, right? But again, you can have that payment double that for $75,000. It's kind of crazy, but that's the difference between loan term. So you always want to get the longest loan term you can get. That's going to have a big difference as it actually comes into your payments, okay? Small marks and all right. So if you have any other questions, go ahead and type them in. I want to make sure any questions you have there are actually answered. And I'm going to actually expand a little bit off this. So I want to give you a couple other backgrounds too of what you need to address. You've got to get your LexisNexis credit report. You need to do it immediately. It should be done today. I can easily go to Google right now and go free LexisNexis credit report, pull up a form. I'll do it right now so you can just see. So if I go to free LexisNexis report right here, I can easily go. It says go away from the ad, order your report online. Here's my report, fill in the form, and I'm done. I used to have to download the form and send it in. Now I'm good. I could just enter my information and submit it. You need to do this. If you don't get a LexisNexis credit report, what I found is the vast majority of issues that cause big loans to get denied come from this one report. Here, I'll show you. Here's my LexisNexis credit report. It's 300 pages. Here's my finger so you could just see the actual how big this report is. So my report's 300 pages, and I'm going to give you real examples of why this will cause problems if you don't get it. Two real stories that I'd like to share. When we got our SBA loan, they approved us and they came back and required my personal home as collateral for the loan. It didn't make any sense because we have account receivables that were well past the loan amount that should have sufficed. Come to find out, there were judgments on this credit report that were not accurate. So what happened was I didn't even know they existed because they weren't on my consumer credit reports. And we said, why would you collateralize the home? Well, the underwriter said, well, it's because of these judgments. I said, what judgments? So we got LexisNexis to realize that there were judgments on here that weren't even accurate. Now, I went to the county and got proof from them and went to LexisNexis and got them removed and got the bank loan. And because of that, they removed the stipulation to use my home as collateral. So think about that. That's the difference between my home being forced to be used as collateral and not. The difference is that I was able to get LexisNexis and clean it up. So LexisNexis is a really big deal because even what doesn't show on your consumer credit reports comes from this. So for example, if you've ever tried to dispute a public record, a bankruptcy, a judgment, anything that was public records, and they came back and they verified it, well, they're verifying it from LexisNexis. This is where TransUnion, Equifax, Experian get their public record data. It comes from LexisNexis. Now, if you went to LexisNexis and disputed the bankruptcy there, got it removed from here, then disputed with the credit bureaus, you'd see it gets removed. So LexisNexis is where all this data is coming from that the credit bureaus, consumer and commercial, are using. One more example. They ask on a typical application for millions of dollars if you've been convicted of any misdemeanors or felonies. I answered no. I'm a pretty straight shooter, right? 11, 13-year-old kid. I'm not running around committing felonies. But actually, surprisingly to me, they came back and said, you lied to us. You actually have multiple misdemeanors. Now you need to explain the misdemeanors and explain why you lied. Now, the funny thing is, I literally had to pull a background check on myself to even understand what they were talking about. I didn't even know what they were referencing. And what I found out was that when I was like 19, 20 years old, I was in the Air Force. I had a motorcycle. I was speeding, and there was like a female police officer. I was like trying to impress her. I'd heard about her, get her phone number, all that kind of crazy stuff you do at 20. I was popping wheelies, literally intending on getting pulled over. I got pulled over, got a bunch of tickets. Those resulted in misdemeanors. Those show up on my record. Now, fast forward 20 years later, those things come back and bite me for an SBA loan. How did they know about it? It's all right here. All this came from LexisNexis. And once we realized this, we got the report and we cleaned it up. Merchant accounts, bank accounts, loans, all the stuff we struggled for to get before, we never had a problem again. Matter of fact, to get an SBA loan now takes me 3 weeks to get. Okay, that's crazy. But I can get it because I understand what they're looking for. LexisNexis, I clean this up, and now I'm clean. Now I show them what they want to see. And let me be honest, that's what this is all about. This is about understanding what lenders and credit issuers want to see. When they ask you for documentation, when they look at your credit reports, when they look at your financials, What is it they're really looking for? And if you think about what I've taught you today, that's what I'm teaching you. I've spent my professional career pulling back the curtain, looking at actual underwriting guidelines for SBA, at the lenders, understanding at their level what they want to see. And now I'm here telling you, hey, psst, they look at 411, list your phone number there. Hey, psst, don't use a UPS address. It's going to get you denied. Hey, psst, here's a secret credit report they use that they're getting all their data from. Get that guy, clean that guy up. You're good. Hey, psst, they're going to deny you because your industry code's not high risk. It's easy to fix. It's really easy to fix if you just understand the rules that you're actually expected to play by. And that's really why I want to show you all this, because all of this comes back to what they really want to see. You get the stuff in line. That really is the key to being able to be successful. Okay, so that being said, and we've got Julian here from Corporate Builders of America, LLC in Vegas in the house. What's up? Thanks for coming in, saying hello. Good background checker. I have no idea. I just looked online for a typical background check. My HR does them on every employee. I don't know who they use. I can't even recommend one that was good. I just found the first one that was available for me. A good service for cleaning up LexisNexis. You can hire a good credit repair company to do it. Some of them work with this. We do this for our clients. Clean up, getting LexisNexis and cleaning it up is part of what we do for our clients. If you work with us, we do that as well. And then also just get the report, look through what's inaccurate, make a list, write a letter yourself to LexisNexis and dispute it. That's my best advice there. Hi, on the site, are we going for a high credit score on this site? Hi, on this site, are we going for a high credit score? Esther, yeah, well, you're going to want to have good consumer and commercial credit scores in order to qualify for this kind of financing. So let's talk about collateral. You're going to have collateral equal to the amount that you're borrowing or more for SBA loans. So what that means is, it means that if I'm borrowing $1 million, I need to have some kind of assets to offset the risk that's worth about $1 million. If I don't, they'll go after everything that I have. They'll take my house, they'll take my stocks, my bonds, my bank accounts, my jewelry, anything I have worth money, they will require collateral. And if I don't have enough business assets to be equal to the loan amount. Now, the number one asset used to qualify for SBA loans is account receivables. It's letting your customers pay you on terms. That's money that's outstanding to you, receivables that's owed to you. That is the number one asset that's used to qualify for these kind of loans. So if you're not already, you should really let your customers pay for your products and services over time. That counts as receivables, and those receivables can be served up as collateral for you to be able to then qualify for this kind of financing, including through SBA. Okay, so you need to have some kind of assets, and there is collateral-based financing where you could borrow against those assets to get money as well. And then next, you need to get the loan. Where do you go to get the loan? Well, there's two main places you want to look. SBA's one, they give loans up to $5 million. Now, I'll tell you, under $350,000 are fairly easy loans to get. Above $350,000 is definitely harder. It takes more time, more scrutiny. So I don't think it's a bad idea, if you don't need the million, to get $350,000. We get our loans in $350,000 increments because they're easier to get than $1 million loans. We just got our last one in 3 weeks. Okay, so $350,000, fairly easy to get, especially if you followed my advice today. You're going to face more scrutiny when you get above $350,000, something to think about. SBA loans give you the longest terms, the lowest rates. They are the ones you want to go after. If for some reason you don't qualify for SBA, you don't have collateral equal to your loan amount, you have consumer credit issues, then you can look at private investors, or what are called alternative SBA sources. There's a lot of them available online. We can help you here at Credit Suite as well. Alternative SBA sources are easier to get than SBA, but the loan terms are shorter. We talked about the importance of that for your payment, and the interest rates are higher. So the financing is not as favorable, but it's easier to be able to get than SBA loans. So you really want to try to get this money from SBA to begin with. And I tell people, when my friends come to me and say that they've got established businesses, millions of dollars, and they want money, my very first question to them is, have you tried your bank? And I always suggest that's where they go first. Because if you go to your bank to get money, then that really makes a big difference. Because with your bank, you're able to already have a relationship with them. They're going to give you more options. And if you have a good relationship with your bank, it's the easiest place to get loans like SBA loans, or even non-SBA loans that they're just backing themselves. Okay, if they can't help you, you run into resistance or problems, then you can come through us, Credit Suite. We can refer you to an SBA lender. You can even go to SBA's website, and they've got a list there of a bunch of their preferred lenders you can go through. But we've got a lot of SBA sources we can refer you to. We never charge you a dime of money to help you get loans. And then there's a lot of alternative loans and lenders you can go through as well. They're usually private investors if SBA can't help. So remember, to be able to get millions, the most funding possible, you got to build that fundable foundation. You got to build good business credit. You need to fix your consumer credit as well. You need to have a business plan. You need to have tax returns that show a profit. You need to make sure that you actually have collateral to offset the lender's risk. And you need to make sure that you look into these other things like check systems, like LexisNexis, these other credit reports that lenders and credit issuers are using. If we can help along the way, let me know. We work with every type of legitimate funding that exists in the business space, and you can get all of it in one place just by giving us a call. We never charge you fees ever, not on the front or back end to get money. Lenders oftentimes give us a referral fee. That's how we get paid. Okay, so that way it doesn't cost you any more money to go through us. As a matter of fact, we do so much loan volume that lenders give us a discount, right? If you go to On Deck, are they going to give you a lower rate when you go to apply direct, or our clients a lower rate when we send 100 clients to them a month? I mean, they give us discounts. We pass it on to the client. So it's cheaper to go with us than direct to the source. And we'll give you the blueprint. Even if you can't get an SBA loan now or qualify for this kind of financing, then we'll help you understand what's needed to be able to get approved so you can work on that. Our goal is really simple. You should never have to look for funding again. When I started Credit Suite, what I said is, why is there not one place that we can go to when we need money? Why do I have to know what kind of loan I have to get and this, all these things? I should have one place I can call and say, like, I want a loan. And they say, what's your scenario? Here's the best options. And that's what we started Credit Suite for. This whole foundation of the company was based on never having to look for funding again, one place to be able to help you. So if we can help you, please do. Did you get value from this? Well, then you should share our next live stream. And if you do, you get like $400 worth of really cool stuff through what we call our free business credit toolbox. And all you have to do is go to creditsuite.com/toolbox to learn more. And again, all you have to do is just share the live stream. You share the live stream, follow the instructions there. Then you're able to come in and actually could be able to get this business credit toolbox. So pretty cool if you share our next live stream. Did you get value from this? If so, give us a call. On a free finance assessment, we will actually make sure your fundability is in line. We'll get your business credit reports for free. Only place in the world you get them at no cost. Okay, and yeah, they do cost us money. We lose money, but it's so important to us that you get them, that we'll actually get them for you at no money, and then go over those with you, give you tips and tactics to build your business credit. We'll even do a financing assessment to talk to you about all the financing you can get now. And you can also go to creditsuite.com, top right of our page, like and subscribe. If you do, you're notified when we go live. You're able to access 1-minute tips on places like Insta and TikTok, thousands of videos on YouTube, daily tips on places like Twitter and Facebook, even a podcast where you can actually listen you can actually listen on the fly as well. Okay, so any other questions here? Lucky says Collateral. To what you're borrowing from for the SBA to be equal to the amount of the loan? Number one, account receivables. Yes, thanks for sharing that. I appreciate that. And Alien Guru says you got to get into debt to be successful. Blessings. You know, this is an interesting saying, and I really appreciate that. Look, the reality is that there's a whole Dave Ramsey approach in the personal world, which I think makes sense. His demographic has a hard time managing debt responsibly. So his thing is you pay it all off, right? But in the business world, if we look at the most successful companies in the country, every one of them from Apple to Uber and everyone in between, they all borrow money. You could just do a quick Google search and say Google debt, and you can see how much money they have outstanding. Google cash on hand. You could do this with any company. Walmart debt, Walmart cash on hand. All of the biggest companies in this country get where they are by borrowing other people's money. So, Aylin, I love that you said this because it really is true. The most successful businesses are the ones that take on debt to be able to get there. And don't forget, I sell Credit Suite. Awesome. And don't forget, you absolutely can be a partner with us as well. And with when we talk about corporate builder here, and be able to offer business credit financing as a service. All you have to do is tell our team that that's exactly what you're looking for, and we'd love to talk to you more about that. Hopefully now you got the rundown of everything that you need to know to be able to set your business up for success. Even if you don't meet the criteria now, you know what to work on so you can qualify to be able to get the maximum amount of money for your business. So give us a call for your free finance assessment. And I look forward to talking to you on our next training where we talk about more cool ways to get the money you need to start and grow your business.